Good morning, my name's Tom Elliott. This is my market report on the last trading day of the year, Friday 31st of December. It'll be a short trading day on the ASX today. As you'd expect, volumes very light both here and overseas. Most people, of course, are taking a well-deserved break. Now, this morning the stock market's down about 25 points or 0.5%, and it looks like it's going to round out the year about 2 to 2.5% below where it started. So 2010 overall has not been a good year for stocks. We've seen Telstra fall quite badly, all the uncertainty over the national broadband network probably responsible for that. Although, of course, Telstra is struggling to grow its baseline profits. It faces a lot of competition, and that isn't going to change in the future, even though the federal government will be paying a lot of money to Telstra should the NBN deal be completed. The real stars of this year have been the big banking stocks, both Rio and BHP, as well as Fortescue Metals, up strongly because, of course, of big rises in commodity prices driven by the strength of the Indian and, more importantly, the Chinese economies. The big bank stocks haven't really gone anywhere this year. They've all been blamed for making too much money, a combined profit of $22 billion. But the reality is the banks are struggling to really grow their operating earnings. What's happening is that they're reducing their bad and doubtful debt charges that they put up in 2008 and 2009. So that's a positive. But growing earnings from this point on is difficult. Business lending isn't growing. The housing market at the mortgage end is probably plateauing. And the banks, of course, are facing higher funding costs overseas. Now, this is not something politicians want to admit, that the banks might actually struggle to grow their profits and might struggle to borrow money at a cheap price, but it is the reality of banking, and it's the reason why their share prices have gone nowhere. Insurance stocks have taken a hit the last couple of days of the share market this year. That's because the floods up in Queensland will, of course, lead to a flood of claims against them. Of course, in the long run, natural disasters are actually very good for insurance stocks because they remind everybody of the reason why you have to have insurance in the first place. So they'll pay a bit of money out now, but you'll get more people trying to buy insurance products against flood damage and other associated things over the next year, because they'll remember just how damaging these floods, which are at record levels in Queensland, were. So it's a year not very good for the stock market. The Australian dollar has ridden the commodity wave, and it looks like closing the year well above parity. Currently it's 1.016, 1.017 cents US. I'm on record as saying I don't think in a year's time the Australian dollar will be so strong. I think commodity prices will plateau and possibly fall, and I also think the US economy will begin to strengthen, which should drive up the US dollar. One thing the Americans have to do is stop printing money, and I believe that the new conservative-dominated Congress, with which Barack Obama, who's from the Democrats, is going to have to somehow work with, I think they'll stop that silly economic policy, and that will put some strength back into the US currency. So overall, we look for better times ahead in the year to come. There's an old saying that you should buy the bombed-out sectors of this year. Well, that would mean avoiding resources and perhaps going for banks and Telstra. I don't know. I think 2011 is going to be pretty tough on the stock market. I don't expect any big overall gains.